StoneX has just released its latest quarterly commodities outlook, examining the key trends shaping global markets. In the vegetable oil complex, 2025 has been especially volatile. Soybean and palm oil prices have swung sharply amid U.S. biofuel uncertainty, changing global demand and strong production across major regions. I'm Johanna Bota, and joining me to break down the key drivers and what to watch in the months ahead is Leonardo Rossetti, Market Intelligence Analyst at StoneX Brazil. Leonardo, great to have you with us.
Thank you. It's great to be here, Johanna.
So, as I mentioned earlier, 2025 has been a roller coaster year for soybean oil. What's been behind those big swings?
So first, it's important to remember that when we talk about vegetable oils, we're not just talking about food industry, but we have to focus especially on biofuels, since they are growing a lot in the last few years, and the veg oils, they are the main feedstocks for biodiesel or renewable diesel, for example. So in 2025, the soybean oil has been affected by several decisions and uncertainties surrounding the US biofuel policies. Basically, the American biofuel market depends on two key incentive programs: the tax credit and the RVOs, the Renewable Volume Obligation. And both of them are facing a period of transition and going through a lot of changes. So on the tax credit side, the previous credit, which used to grant $1 per gallon of biofuel produced, expired in the end of last year. And this year, the industry started with no credit available for them, which caused a huge negative impact in their profit margins. After that, the EPA, the Environment Protection Agency, released a proposal for a new credit, which was much smaller and specially for biofuels produced from soybean oil. And this caused a negative effect for biofuel production and for soybean oil in the first half of the year. Later, in July, the Congress approved a better version of the credit, which is going to favor domestic feedstock over imported one. And this is positive for soybean oil because it is losing share in the last few years for our other imported feedstocks, such as tallow or UCO, the used cooking oil. But these new rules will be only take effect in next year. And in the other key issue involves the RVOs. The RVOs, they basically set how much emission must be offset by the fossil fuel producers. In simple terms, it defines the minimum volume of biofuels that need to circulate within the US market. So for this year, those targets have been set well below the biofuel actual production levels, which has also impacted negatively the biofuel profits. So in June, the EPA released a proposal for a much higher RVO for next year, which in that moment was very well received by the market. We saw a hike on soybean oil prices in that moment. And it also planned to include some changes that would also incentive a higher use of domestic feedstocks instead of imported ones. But this proposal has not yet been approved, which caused some concern and made the planning for these producers difficult. So to conclude, while these new proposals have added some moments of optimism about a stronger consumption, especially looking into next year, which gave some support to prices in certain moments. These many uncertainties and questions surrounding these programs has weighed on the market throughout the year, putting downward pressure on the prices and preventing prices from remaining at higher levels.
Of course, and creating those big swings. So, what impact have these U.S. policy changes had on biodiesel and renewable diesel output so far?
So based on the most recent data that we have that goes through July, the US biodiesel production is 30% lower compared with the same period from last year, while renewable diesel is about 9% lower. Despite soybean oil prices have risen in some moments of the year, as I mentioned, in the moments when these new incentive proposals were released, this year's reality is it has been of a weaker biofuel production, and therefore lower demand for feedstocks like soybean oil, which has kept these prices mostly under pressure.
Okay, so then what could bring relief or some renewed support to soybean oil prices?
Yeah, overall, the soybean oil might remain under pressure through the end of the year, since the most of these new measures of incentive will only take effect next year. Once that happens, we should see a stronger consumption and potentially higher average prices in 2026. That said, for the short term, these remaining decisions about these incentive programs will be crucial. Right now, there is a dispute between the biofuel and fossil fuel sectors, where the fossil fuel producers are demanding some changes over the final structure of this program. So, if the EPA ends up making the changes that favors fossil fuels, the soybean oil prices could remain under pressure through the end of the year. On the other hand, if the RVOs and these rules that incentive the use of domestic feedstocks over imported ones are approved, we could see some support for soybean oil prices in the coming weeks.
Okay, so when you look at the global picture, then, how does Brazil's situation differ from what's happening in the US market?
Uh, yeah, here in Brazil, the biodiesel rules they are simpler. We have a mandatory biofuel blend that all market must follow. So this year in August, the government raised the blend mandate from 14% to 15%. So 15% of biodiesel must be blended into diesel. And also, there's a long-term plan to increase the mandates to 20% over the next few years. This is boosting the biodiesel production and the soybean oil consumption in Brazil. We should see new record levels for biodiesel and soybean oil demand this year, and probably also in the next year as well.
Yeah,
Uh, However, we might see some delays in this implementation schedule. This year, for example, the increase was planned for March, but only happened in August as the government was trying to control the soybean oil inflation for the consumers. We have also seen situations in the past where the government reduced mandates, and this was really bad for the industry. So the long-term outlook is very positive, is very supportive for soybean oil here in Brazil, but there's still a risk of further delays that could create some frustration in the industry along the way.
I see. And one last thing before we let you go. Palm oil has had actually a stronger quarter. What's been driving that improvement, and what should we keep an eye on going forward?
Yeah, palm oil strength this year is mainly due to Indonesia higher biodiesel mandates. Uh, Indonesia is the world's largest producer of both palm oil and biodiesel, and it has this highest blending mandates in the world. So, in the beginning of this year, the country raised their mandates blend from 35% to 40%, which is increasing biodiesel production and therefore palm oil consumption to record levels this year. So this scenario has reduced Indonesia stocks and raised concerns about the exports availability for the rest of the world, since Indonesia is increasingly consuming more of its
Yeah.
own supply. Looking ahead, the Indonesia government is already talking about a possible new increase in the mandates next year to 50%. So going from 40% this year to
Yeah.
50% is a big
Big jump.
increase.
Yeah.
Yes, and the market is cautious though, because this measure will be costly in terms of government subsidies and could have inflationary effects in the Indonesia domestic market. But uh, I think this is the most important factor that the market will be watching closely in the next months. So, if the government does go ahead with this increase, it could mean even less palm oil available for the rest of the world, Obviously, depending on the production levels in Indonesia or in Malaysia, which is the second biggest producer of palm oil, but this could be potentially a strong bullish factor for prices for 2026.
Leonardo, thank you so much for being with us, and thank you to our viewers for watching. For deeper insights and analysis, scan the QR code or click the link in the description to download the quarterly commodities outlook available now on the StoneX website.